Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, September 4th, 2013. Well, we're going to do something new here. We're going to kind of grade the market and also grade it on a couple of different levels. We're going to grade the price action. We're also going to grade the internals as well. So for today's session, I'm going to grade this a C minus at best. We're up 7 handles on the day on the ES side. The NASDAQ futures were higher on the day as well by a like amount on a relative basis. But we settled well below the day's open. So on a grading basis, this is a C minus at best, and I think we'll start this new program with being a little bit generous. The market internals were kind of similar, kind of in that C area. Nothing worse than that for sure, but not really that impressive internally. But let's dig right down to it and get onto the important futures contracts, and let's start with the ES futures. All right, so here's a look at the ES futures. Keep in mind that there's an extra candle on there because the futures did trade on Monday, even though the markets were closed, so there was a little bit of a Globex session going on. So that's what we're seeing on the chart here. So today we gapped up higher on the day and barely closed above the settlement from the last real session from last week. So really, we're up on the day, but that close below the open is never something that you want to see if you're on the bull side of the market. Really seeing a kind of a loss of power here. We're still on the south side of the 10 EMA and also the 50 DMA. The other thing to keep in mind here is that we're now into the asterisk mode on the secret countdown. So as soon as we get back up here and retest the prior highs and get back above this 8 candle on a closing basis, we're going to have our secret 13 exhaustion in place. The levels nearby are going to be the gap fill from 2 weeks ago at 1654. That's going to be a big level because that also is coincident with the 6/8 level on the Marine Math box and also the 50 DMA. The other big level to the downside is 1625, which is now the 4/8 level on the Marine Math box. So those are the levels above and below to keep an eye on. Take a look at the NQ futures. NQ futures on a relative basis had a very similar day. The level to watch to the upside is going to be that gap fill, 3125. We're going to call it just because that's the big number on the Murray Math box. To the downside, the slow water mark, which is just above the static trend line, is going to be near-term key support at 3052. So those are the two levels. The NQs are much more neutral. You can see that the 10 EMA is kind of lateral here and kind of flat, and we don't have that same kind of a downtrend in the short term. So short term, we're just kind of lateral here, waiting to break out of that range and take out one of those two key levels that we just talked about. All right, so internally, we were positive on both sides of the market, but it certainly wasn't impressive. You can definitely see that on the New York side. We barely moved the needle here on the cumulative advanced decline line. We're still below that key level and still in this lateral range. NASDAQ side was a little bit more positive, but you can see that while the NASDAQ futures are more or less lateral, the market internally is actually starting to churn quite a bit more. We did have a bit of a positive day with 750 advancers, but it doesn't do anything to break this little downtrend that we're in right now. Now here's a look at the 10-day trend. The 10-day trend was getting close to that oversold area, 1.35, but we're not there yet. So there's still potentially more downside in the market before we do record that 1.35 oversold threshold. So keep an eye on that. Once we get to that area, then we're going to have to start looking to take in some shorts and look for a bounce in a better bounce in the market. But we don't have that condition just yet. All right, our key risk on and risk off metric definitely took a bounce for the better here today. You can see that we did curl up here on the S&P TLT cross, but we're still below this trend channel. If we get back up into that trend channel, that would be a kind of a feather in the cap for the bulls, meaning that they're starting to reassert themselves. But until we do that, this loss of the trend channel is negative and will weigh on the market. All right, taking a look at the multi-sector daily chart, definitely the BTK, which is the red line, which represents the biotechnology index. That was definitely the real performer on the day. The banks and the semiconductors were both positive, but really not that spiffy. And the XAU took a little bit of a bounce, but really has not been able to take a shot at this key resistance area just yet. So let's take a look at the individual sectors now, real quickly. All right, so here's a look at the individual sectors. As we talked about, the BTK was the top gun by a good margin. That was up 2% on the day. Still got some room here on the counts before we run into any kind of a problem. Airlines were pretty strong, and computer hardware also was much stronger than the rest of the market. The semiconductors and the cyclicals, as well as most of the energy names, were kind of middling here, just more or less performing with the market. Started to see some weakness in the pharmaceuticals. They were fairly weak, and the utility index was also weak. So a lot of the more yield-dependent things were kind of lower down on the list today. And so keep an eye on this to see if this condition persists. All right, so here's a look at some of the individual sectors. The BTK is just kind of riding this little bit of an area right now. We did have this breakaway gap here that got up back above the 10 EMA and the 50. And right now we're just kind of riding this in a bit of a range right now without being able to break out above or below that. Broker dealers outperforming the market by a little bit. Just want to point out that we're getting into this area here where we could be getting close to another seeker exhaustion. We're 11 days up in the count. Granted, it's very, very lateral, but if we do get that 13 up in the area of 8 days, it's going to have some teeth to it and definitely weigh on the market. So, of course, the broker dealers lead us to the banking index. The banking index definitely tried higher here, found resistance at the 10 EMA, and basically closed back into this area of congestion at this 4/8 level at 62.50. If we lose this low from last week at about 61.80, 62 area, then we're going to start to roll down and potentially put this previous low into play. Also want to look at the utilities, which was the weakest sector of the day. We're in this little consolidation area here. We broke down below that, made a new low on the move, and also a new low close. You can see that we're getting a little bit closer to that key 0/8 level that we used for support back here many months ago. So keep an eye on that. You can see what the pattern looks like here. Got a little bit of a droopy shoulder ahead, and then potentially another shoulder here setting up on the right side of the chart. So definitely be aware of that. And if this does develop into more of a head and shoulders pattern, we'll definitely keep you on top of that. All right, we haven't looked at the dollar index in a while. It's definitely worth keeping track of, especially if you trade multi-markets like we do here at Tradesight. We did push above and close above the 50 DMA for the first time in about a month and a half. So that's definitely a notable development. We haven't really confirmed that by taking that level out. If we do better the high of that candle that took out the 50 on a closing basis, we're going to put the 4/8 level at about 82, 83 into play. And then looking higher, then we can start looking at the active static trend line. All right, now also from a multi-market perspective, here's a look at the TLT. That's the ETF that represents the government long bond. TLT is still riding below the 50 DMA. The 10 EMA is essentially lateral right now. They did try to get back up into this area where the 2/8 level is 106.25, which was the origin of this breakdown and this gap to the downside. Haven't been able to recapture that, but if they do take out the 50, that's going to be a real notable development, and definitely start ratcheting rates quite a bit higher. All right, final chart for today. Here is the oil charts. These are the mini futures, the QMs. We do have this 13 exhaustion in place. Like we talked about when it was developing, it's very lateral. Here's your 1 and here's your 13. There is no extension. So we definitely have our level set up. We did sweep above the risk level from that 13 exhaustion signal. We closed above it but didn't take out the closing candle there. So this risk line is still in effect and still definitely weighing on the market. You can see this tweezer-like activity here. Granted, a lot of it's Globex and light trading, but we certainly have been volatile here. But for now, we're still in this lateral trading range. The 112.50 area did trade at least on an intraday basis. It actually went up just a smidge higher than that. So we can definitely cross that off the to-do list. That 112.50 has traded, but keep in mind that has traded, and at least on first test has provided some reasonable resistance to the downside. These lows here at the 5/8 level at 103 and an eighth are definitely the key support. All right, folks. Tomorrow, keep in mind that we have camouflage sell signals on all three sides, on the ES, the NQ, and the YM futures. So even though we were up on the day across the board, we did close below the opens. So that does have negative implications for tomorrow. Well, as always, thanks for listening. This has been Rich for Tradesight.